What's going on, team, and welcome to this video. In this video, I'm going to be showing you exactly how I lost $4,000 trading this week. This week has definitely been one of the toughest weeks I can remember that I've had. It's been very, very tough for obvious reasons. It's election year. It's the summer months, which are known to be worse price action because market makers and all the people working in the bank are on holidays. The indexes, which I'm trading, the NASDAQ and the S&P 500, keep pushing all-time highs basically every week, which means that we have no previous data to base our entry, take profit, or stop loss at. So the market has just not been on my side, not providing good opportunity. I've also made a lot of mistakes that hopefully we can clear up in this video so that you do not make those same mistakes. It is very important that you understand that it's perfectly normal to have red weeks. You are going to have red weeks, right? We cannot just be profitable every single week. You're going to have very good weeks and you're going to have very bad weeks. That's how the game goes. It's very important that on the bad weeks, you don't open social media and look at other people's trading profits. Very easy to tell yourself that you're doing bad or think that you're doing bad or think that the strategy you're using is failing when in reality it's not. The reality of it is they saw opportunity that day that fit their game plan. You think you saw opportunity that fits your game plan, but you really didn't, right? And that's the only difference. Some days you make money where they lose money. Some days they make money where you lose money. That's simply how the game works. So understanding that it's normal and it will happen will hopefully help you calm your mind. And realistically, the only thing you can do is manage your risk and follow your plan. As long as you're doing that, you're doing everything you're supposed to do. Let's go ahead and break down the trades that I took for this week so we can see exactly what mistakes I had made. So right here, we're looking at the first trade that I placed this week, which was an optimal trade entry short. And the reason for this trade was obviously we had some bearish displacement right here. After that displacement, my thoughts were immediately we are going to sweep the stop losses resting below some equal lows that we had over here. And we're also going to mitigate the unmitigated 12-hour inefficiency or imbalance for value gap, whatever you want to call it, that we have down here. Obviously, the market is attracted to two things, and that is liquidity and inefficiencies. So when we have equal lows, that means a lot of stop losses. We have a 12-hour imbalance, which means a large inefficiency. So that is where I expected the market to go. My entry was going to be optimal trade entry of this trading range. Obviously, as you can see, it ended up failing, but I went break even with this 948 candle that swept the 947 candle low. So this was actually a break-even position. Now that can be very good or it can be very bad. The reason why it can be bad is because it can make you feel like you're missing out, right? It can give you this FOMO effect, which it really shouldn't, but it can really set you up for failure for your following trades. And I think that's what happened here because actually the week prior to this was an okay week. It was a profitable week, but it was also one of the largest opportunity cost weeks that I've ever had. I left a lot of R on the table. I was very unlucky in terms of my fills. I was not getting filled where I wanted to. All this stuff happened. So even though it was profitable, it was a lot of opportunity cost. And I think this break-even trade after such a week just set me up for failure. So that was the first trade of the week that went break-even. Let's jump on to the next one. So again, as you can see, sort of the same scenario. We have equal lows and we have the 12-hour imbalance. That's the exact same equal lows and the exact same 12-hour imbalance. And as you can see, I entered off of the optimal trade entry of this newly created 1-minute trading range. We also swept this low resistance liquidity that we had here. And I really thought that is exactly what the market wanted to do. Hit optimal trade entry, sweep the buy side liquidity here, and then go towards those equal lows and that 12-hour imbalance. As you can see, I was terribly wrong. The market just kept trending higher. And essentially, I got stopped out. Now, it's pretty obvious why I got stopped out. I should not be looking to short a market that is bullish, right? We are at all-time highs. The whole week has been extremely bullish. Previous week was extremely bullish. So me trying to short the market all the time is essentially what I did wrong on a lot of the trades that I placed this week. The human mind simply has a hard time accepting that you can go long on an asset that is trading at all-time highs. But we all have this sell high, buy low mentality. That's just how our mind works when talking about the stock market. And so it can be very difficult to want to look for longs because you feel like the certain asset is overvalued and it is probably going to drop soon. That is exactly why a lot of people are losing a lot of money during very, very trending markets because they always want to try and catch the top, which is essentially what I've been doing all week. And that was one of the largest mistakes that I've ever made. Now, this is not the first time this is happening. I can see in my journal that throughout the years, I always struggle when we have a very one-sided market. I have a hard time accepting that I can long a market that is so far up in a premium. So I always try to look for shorts when in reality, it's obvious that the market wants to favor long. So this was the first trade that I lost this week. Very unfortunate. Now, I don't think it was a bad play in terms of technicals. I think the technicals were on point and it was really, really good. We have this order block right here at the 0601 optimal trade entry level. So I do think this is very good. Very, very, very obvious drawn liquidity, I thought. Unfortunately, though, this was just not for me, and I should have favored longs over shorts. But it is what it is. We'll jump to the next day. Now, here we are on Wednesday. I did not trade Tuesday. So this is Wednesday. We had a 5-minute unmitigated imbalance here. This low was made inside of that unmitigated imbalance, but there was still a large inefficiency left. Now, down here, we also had a 4-hour unmitigated imbalance, which means we have a 4-hour gap that we have not hit at all. And I was heavily anticipating this to be the next drawn liquidity. And so I shorted this optimal trade entry here because we had an SMT here with the SMT or with the S&P 500, which means the S&P 500 swept the high, the Nasdaq did not. That is an SMT divergence. And that is basically why I anticipated this optimal trade entry to hold. Obviously, it failed to hold. I got pretty close to getting my take profit hit here. Unfortunately, though, it reversed on me and stopped me out. Now, again, I'm looking for shorts in a very obvious bullish market. This actually ended up being the next drawn liquidity. Price just wanted to sweep prior highs one more time. Very difficult for me to predict that. So in terms of technicals, I think it's okay. Certainly not an A+ setup, but it's reasonable. And I was right in terms of the bias, just unlucky with my execution. And again, looking for shorts in a bullish market is just not a good idea. So yes, that was definitely a mistake on my end there as well. Now this right here is where it gets really, really unfortunate because I've had obviously it has not been the greatest week. And so I took this play long from this hour 4 imbalance, and this was the first low created within a 2-hour imbalance. And so I was anticipating this to be the point of reversal. So I entered a little bit below that low once we swept the liquidity resting here. And I was going for a 3.49R trade. Now, I got stopped out by a single tick. My stop loss was 703.50. The market went to 703 and stopped me out, and then eventually hit my full take profit up here and went even higher than that. Essentially, this was the low of day that I caught, and I got stopped out by a single tick. So this I cannot say anything about. I think my technicals were on point. I think the way I viewed the market was on point. I was just very, very unlucky with my stop loss. Now, something like this is impossible for me to calculate. It will happen every now and then. Unfortunately, though, Wednesday was just one of those days. I'm very unlucky. It would have been a great week if I had not gotten stopped out here. Unfortunately, I did. And again, having that opportunity cost last week and then having something like this happen, obviously, it's just not good for the mental and it will set you up for failure. So realistically, after this happened, I probably should have called it quits for the week because this affected my mental way too much. Having two weeks in a row where something like this happens is just not a good idea to continue trading because you are going to be affected mentally whether you want to accept it or not. This was the trade from today. Again, the one time where I decide to play the market long, it wants to sell off completely. So again, just a little bit unluck. Technicals was not the best. However, my pre-market game plan was followed. My sell side objectives were hit. We had a 12-hour imbalance up here that got hit. Then we had an hourly imbalance down here that got hit. This hourly imbalance was honestly the lowest I expected the market to go. Again, we're at all-time highs. I have no way to tell when the market is actually going to reverse because I have no data telling me, it might reverse here, it might reverse here, it might reverse off of this level, off of this level. I have no idea because I have no data because we're trading at all-time highs. So essentially, the best tip that I could give you when an asset is trading at all-time highs is simply just to go with the flow and always come into every single day expecting bullish PD arrays to hold or bullish levels to hold and the bearish ones to fail, right? We want to just anticipate bullish price action in a very bullish market when an asset is trading at all-time highs. A saying that a lot of people use is that the all-time highs always goes higher than you think, right? So a lot of people try to anticipate the reversal of an asset trading at all-time highs, when in reality, it just keeps going higher and keeps going higher and keeps going higher. So there's no reason for you to try to predict when this reversal is going to happen. It's way easier to just follow the flow, right? And that is what I failed to do this week. And obviously, the one time where I try to catch it long, it wants to sell off. So both of my sell side objectives were hit. As soon as we hit this hourly imbalance, we got this beautiful, nice reaction. The S&P 500 was really bullish at the time as well. So again, I expected just higher prices because that is what's been happening all week. Obviously, we decided to completely violate the levels that I watched for this given day and just sell off. So again, just a very unlucky week. Again, not favorable price action. Luckily, my size is significantly lowered these past few months because I understand the circumstances that the market is currently in, but definitely one of the worst weeks that I've had in a very long time. Also, the only red week I've had in a very long time. But But again, it is going to happen. We cannot be green every single week. And this run right here is just not a week where I should be sizing up. And luckily, I was sizing down heavily, and I have been because I understand that the markets are just not in my favor, obviously. That was this week's trades. And again, I cannot be green every single week. We have to accept this as traders. This business requires expenses. What we can do and what we hope to do is have the green weeks be better than the red weeks, right? So with last week, even though that was a mediocre week, I won 2 trades, I lost 2 trades. It still made up for the losses I've taken this week. So I won 2 trades last week, and it made up for all the losses that I've lost this week, right? And that's essentially what I want to try and get at. But even though it seems and looks bad on paper, in reality, it's not that bad. It's just going to set you back a little bit, and it is completely normal. It's a part of the game. We simply cannot avoid it. All we can do is do exactly what I did in this video and try and learn from the mistakes that we've made. Now, I wanted to record this video so that hopefully you can learn from my mistake at no cost. Because obviously, me learning from the mistakes I've made here cost me a lot of money. So hopefully you can learn from the mistakes that I've made without it costing you anything. Again, the things I did wrong was anticipating shorts in a very, very bullish market. I should have just went with the flow. Also here, it was obviously a very, very bearish market in this last trade. But again, because the market has just been telling me all week that I should be looking for longs and not shorts, I simply wanted to try and give it a stab long, and that's exactly when the market wants to sell off. So not a lot I could have done there in terms of technicals. The other trades, although I could have, anticipated bullish price action instead of bearish price action. So that's definitely a mistake on my end. Again, just a very unfortunate week that was not in my favor. It will happen. And I wanted to come on here and share it with you. So I really hope you enjoyed this video, and I'll see you in the next one.